Howdy, who all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, the Dow's down about 100, Nasdaq's up about 50, so it's kind of a mixed market. S&P sitting around 4380. Now, what we've got going on in the markets right now, in my opinion, is a topping out process. We're starting to top out again. Now, once the big names that have pulled this rally up, the names like Apple, Nvidia, Microsoft, Google, all of these are moved upwards, right? They haven't rolled over yet. Once those start to roll over, this market's going to come in. I think it's going to come in by about 20%. That's just my take. A lot of you think this AI boom's for real. A lot of you think you're going to get to new record highs. And you could be right. That's what makes the market, differences of opinions. My opinion is that we're going to come back down. Now, we're sitting at about 4380, but we've got some gaps to fill, right? We were up at 44.30 and we gapped down, and then we gapped down the next day and we gapped down again, and now we're coming back up and filling those gaps, retesting the recent high. Now, I don't think we're going above the recent high. I suppose it's possible, but I think we're going to go up, make a lower high, and then we're going to come back in. And like I say, I think we're going to come back in by, I don't know, 15-20%. I'm not ready for the all-out crash yet. The all-out crash is coming. I just don't think it's time for that quite yet. I think we're in this topping out process, and I think we're going to go up and fill the gaps before we come back down. So we'll probably get back above 4,400, and that's a good place to start looking to bet that the market's going to go lower. All right, so we had a lot of good news. I want to talk about the good news today. The good news. All right, so the Biden administration, now they're the ones responsible for this booming economy that we're in. They're celebrating it today, right? Because the economy is booming. Now, I don't know about you guys, but in the last 3 years, my money is worth a lot less than it was 3 years ago. Okay, so when I go to the grocery store, I pay about 60% higher prices than I did 3 years ago, right? When I go to the gas station, I pay about 60% more for gas than I did 3 years ago. Now, if this is to be celebrated, well, that's okay. The other thing, right? Wages. Now, real wages have come down every month for the last 24 months. 24 months in a row that your wages have come down. This could explain why a lot of Americans are not that happy. But if you want to celebrate this, the Biden administration's out there celebrating. I don't know, maybe Hunter smuggled some of the good drugs into the White House, and in their minds this is something worth celebrating. But to me, it's not. Now, I'm not picking on the Democrats. I hate the Republicans just as much. I hate most of the political candidates out there. It's just who I am. I don't like what's going on. I don't like how they're controlling the debt, how they're spending the money that our tax dollars go in, they spend. I don't think they're spending it right. But we're going to talk more about that in a while. But let's get over to the good news again in the real estate market now. Okay, all right. Home prices increase again. Everybody's all excited, right? The April numbers came out and we've jumped up again. You know how much we jumped up? We jumped up from in April, month over month, we went up 0.5%. Okay, so we went up in April, right? And April's typically an up month for real estate. It's just a seasonal thing. But okay, but here's what the article goes on to say, that we've been down still year over year. We're down, right? Year over year. We're still down. Now, it gets fascinating here. I mean, they love to manipulate the data. All right, so even though they say we're down year over year, here's what they say. We're up for the year. We're up 1% since January. So if you started in January till now, we're up 1%. Okay, maybe we are. But we got to think about this, right? We were going up 20% a year. You can look at the chart. 20%. All right. And now what's happened? Well, we're not going up. We're actually going down. Year over year, we're going down, right? But shouldn't we be going up? I mean, inventory's really short right now. The economy is like booming. Shouldn't the market be going up? Well, it's not. It's not going up. What's wrong? But everybody's excited about this April number that came out because month over month, it's up 0.5%. And what they go on to say in the headline, as a matter of fact, they say this. Anyways, the fact that home prices increase again, it's cementing the recovery we're having. We're having a recovery in the home prices, right? Now, a lot of people go, Mike, in my area, there's no recovery. We've been straight up. We're at record highs. Well, that's great. Your area only goes up. But the article goes on to say that this opportunity has given homeowners some of their equity back. See, homeowners have lost a lot of equity. Now, if you're in San Jose, California, the area that I sell in, anyways, we're down. Came down about 15%. Okay, 15%. Now, I will admit, we're bouncing from here. We're only down about 10%, so we come up about 5%. But why do we come up about 5%? Well, let's think about this. Let's think about the timing of when we came up 5%. You know when the market started to rebound and we're up at 5%? Okay, that rebound came when they bailed out Silicon Valley Bank. Now, if they had let Silicon Valley Bank go down, San Jose would be down already 20, 30%, I guarantee it. But they came in and they spent billions and billions of dollars of taxpayer money. Now, to bail out the top three banks, which was Silicon Valley Bank, First Republic Bank, Signature Bank, anyways, they spent $400 billion. Did they have $400 billion? No, they didn't have $400 billion. What do? We just print the money. So $400 billion came flooding in, right? And every time the money comes flooding in, well, you get the little spike up in asset prices, spike up in the stock market, spike up in the real estate market. But we haven't made new highs. We haven't got back to where Billy Bob got out at. There's not going to be new highs. The real estate market's going to come in. That's still my contention, about 40% more to drop from here, just to revert back to the mean. Now, why do I think we're going to revert back to the mean? Well, we always revert back to the mean. There's never been a time in history where we don't revert back to the mean. But Mike, it's different this time. We can just print money. Look, that's what they're trying to do, right? Okay, what was that? What was that act that came out? The Affordable Inflation Act. I don't even know what it was called, but $1.7 trillion, $1.7 trillion. And you take that $400 billion they just spent to bail out the banks. That's over $2 trillion. Once again, money we do not have that they're going to bail us out with. Now, I don't know how many times I can say this, but the fact that you cannot print your way to prosperity as a country. But Mike, it's different this time. We have modern monetary theory. Now, modern monetary theory, they didn't teach this when I was in economics. They did not have modern monetary theory back then. Modern monetary theory just means that you can print as much money as you want, that it doesn't have any effect. It doesn't have any bad repercussion. Now, as an economist, I find this appalling. I find it disgusting. I find it ludicrous that we think we can print our way to prosperity. Now, they're going to try. Believe me, they're going to try. They suspended the debt ceiling. Since they suspended it, we're up another $500 billion already, blew through 32 trillion, going to 33 trillion. Throw in what the Fed's balance sheet is, which is another 9 trillion. Well above $40 trillion, right? And now if you just take the average interest rate that's on a bond, 5%, that's $2 trillion a year we're spending just to pay the interest. And we don't bring in about 4 trillion. So about half the money that comes in out of our tax dollars, my tax dollars, your tax dollars, is going to go to pay off the debt. Just the interest, not to pay off the debt. They're never going to pay off this debt. No, they're not. They're not going to pay off this debt. It's impossible. Impossible to pay off this debt. But okay, so that's why we're getting this, what I would call a false dawn, a false daylight, if you will. See, people think they're seeing this daylight in the housing. They're not seeing daylight, man. It's like the train coming through the end of the tunnel. They're seeing the light at the end of the tunnel. Just a big train. It's going to mow them down. This real estate market's coming in. Now, you can ignore the leading indicators. You can ignore them all. Okay, you can ignore the fact that, well, rents are coming down. Year over year, rents are down. That's a leading indicator. You can... the volume of real estate sales has crashed 20 to 30% down in most areas. That's a leading indicator. You can ignore all these car repossessions, 10 to 15,000 car repossessions a day. That's a leading indicator to the real estate market. They'll let their car go before they let their house go. But eventually they're going to let their house go in the form of forced selling. Now, I say we're going to revert back to the mean. Now, what are the three ways? There's three ways we can revert back to the mean. Okay, number one, price can come down to the mean, right? Okay, price can come down to the mean and make homes affordable again. How else can they revert back to the mean? Your wages could double. Your wages could double, and that would be a form of reverting to the mean because it would mean that homes are affordable again. But you got to remember, real wages have come down 24 straight months in a row. Now, what's real wages? Well, it just means that your wages went up like 2%, but inflation went up 5%, so you have negative 3% for that month. When you go to the grocery store, even though you got a raise, you still can't afford the groceries you want, so you have to substitute the steak for the hamburger or the hamburger for the steak. I got that backwards, I think. But you get the point. Real wages are coming down, and that's why people aren't happy. So the odds of your wages doubling from here to make houses affordable, very, very unlikely, right? It's very unlikely. All right. Now, the third way, which they're trying to do, okay, they could double. If they double the money supply, the M2 money supply, like they just doubled it, right? Like we're up 40% in the last 2 years just in printed money into the money supply. That's why your house went up 40%. It wasn't that your house went up, it's that your purchasing power went down. Now, they may try to double the money supply, right, which will lead to hyperinflation. But if they double the money supply and houses stay where they are, now food, of course, would be double, gas would be double, maybe houses stay where they are, that would be a third way of reverting back to the mean. But we always revert back to the mean. Okay, so right now, you got people they're basically they're house poor. Now, the other way to look at it is they're house rich, right? Okay, they got equity. Now, I got to give a shout out to Eddie Lou Jones here. Eddie Lou in the comments, he put in there that, people still have equity in their house, but the equity is getting very expensive. You see, since 1980s, back when I was a young whippersnapper, right? Okay, since the 1980s, people that had equity in their house, equity was always coming down in price, meaning coming down that it was cheap to borrow the money. You could go out, refinance your house, get a lower rate, get money out in your pocket to go spend into the economy, and you would have about the same payment, right? Okay, so it always suck the money out of your house. So right now, people, they got this equity, right? There's equity envy out there everywhere. I'm up $500,000. Oh man, I'm only up 400,000. I got you beat. I'm up 600,000. I got 600,000 in equity. But that equity is expensive now. People can't just go out and refinance now, right? Because they got that rate envy thing going on where it's like, I got 3%. No, I got 2.9. I got you beat. I got a 2.7. See, that rate envy, they can't now tap in to the equity market, so they don't have a way to live, a way to get the money out. Yes, they got that equity in their house, which will soon disappear, but they have no way to get it out, right? It'd be good to get it out if you could. The way to get it out is to do what Billy Bob did and go and sell your house, and then you got all that equity out. You're sitting on the beach in Mexico waiting for this market to come crashing down, and you'll come back in after you had the big party, and you'll buy another one. There'll be opportunities out there. I love real estate. It's just a terrible time to buy. But this rate envy is keeping you from tapping your equity envy, right? All right, so you got all this equity, but you can't touch it, right? Because if you refinance, you lose your 2.8% and you jump up to 7%. Yeah, you get some equity, you got some money to go spend now, but that's the only way to touch it. Other ways with a HELOC loan, right? And some people are doing HELOC loans. HELOC loans are actually up around 9% for a HELOC loan for most people, because most people that need a HELOC loan are already they're already putting their credit cards are maxed out. They don't have any other way to get money. So they go out and they get a HELOC loan, right? A home equity line of credit. And they get that at 9% so they can have money to live on. But this is circling the drain. Look at if they can't make their payment now, a lot of people just don't realize how expensive it is to own a home. They don't get it. They just don't get it. They want to go out and live large, but they're house poor because they're strapped into making their house payment. They got to make their mortgage payment. They can't afford the mortgage. Now, right now, okay, you got 63% of the people that bought in the last 2 years have buyer's remorse because they're hating life right now. They're house poor. All their friends are going on vacation. Oh, they got to stay home. All their friends are going out to restaurants they can't go. They got their mortgage to pay. They're stuck. They're strapped in. They have debt. Inflation's going up. They can't afford it. Pretty soon, they're going to have one option. That option is to liquidate their house. And hopefully they liquidate it while prices are still up here around where Billy Bob got out of. Because if they wait too long, they're going to drop. They're going to drop. They're going to drop. Now, people will tell you that I'm an idiot. People will tell you that my thesis is all wrong. People will tell you that houses are going to double from here. If you listen to the mainstream media, the economy's booming. Look at, we're cementing in the recovery in houses. We're cementing it in with this raise in houses in April. April houses went up. Hurry up and buy. Look at, they need you in this market. If you guys don't go buy, this whole house of cards come crashing down. They're desperate to get you in there too right now. You can go to Rocket Mortgage right now, 1% down, 1% down. You don't have the 1% down. Just get their credit card and go out there and party a lot, and they'll give you 2% back on that credit card to apply to the 1% down. As soon as you buy the house, if you're the sucker, you're the bag holder, as soon as you buy that house, you're instantly underwater. Do not fall for this. They're trying to get the last suckers into this market to keep it propped up. They're doing everything they can. 40-year loans, anything you want, 1% down, 50-year loan if you need it. We'll get you into the house. Look at it. I'm a real estate broker. I'm supposed to tell you this is a great time to buy. Get out there and buy a house. That's what I'm supposed to tell you. But why would you want to buy a house right now? This is the largest bubble in the history of the real estate world. It is way bigger than the 2008 bubble. Why would you want to buy into this bubble when rent in most areas is 30% cheaper than buying? You do not want to buy into this bubble. You will be one of those 63% that have buyer's remorse. You will regret your purchase. I got carried away. It's Wednesday, everybody. Get out there. Have a great day. Give me that thumbs up first. I'm Tall Mike. Bye-bye.